Hello, everyone, and happy Friday. This is Tom from MarketsFlow. It is the 6th of December, and we're recording this partway through Friday as we bring you our weekly portfolio performance for the week ending 6th of December 2019. I'm here with Adam as usual. How's your day been, Adam?
Productive, I suppose is how I would describe it. So that's a positive. And it's Friday afternoon, which again is usually a good thing.
Sounds great. So let's get started. This is the webcast 32 for MarketsFlow's portfolio performance for week ending 6th of December. Our podcast is recorded every Friday and is uploaded immediately on YouTube. Please subscribe to our channel so that you can receive it as soon as it's uploaded. MarketsFlow is an FCA authorized robo-advisor and digital wealth manager. We're also SEC authorized. Your deposits are protected by the FSCS for up to 85K. Go to marketsflow.com to learn more about our portfolio performance. You can download our mobile app on the App Store or download it on Google Play. You can sign up and start investing from £10. Before we start, I'd like to run through our disclosure. Your capital is at risk, and any financial portfolio performance figures refer to the past, and that past is not a reliable indicator for the future. But having said that, let's cover the important subject. How did our portfolios perform this week?
Well, up to now, and we're just partway through Friday, of course, with a little time to go before the close. A high growth portfolio is up 0.36 this week. That translates to 8.43% up since the launch of the accessible portfolios at the start of June. The growth portfolio 0.35 this week and 8.27 since that same date at the start of June. And finally, the ISA portfolio up 0.3 this week and 5.42 up since that same early June date.
Thank you, Adam. And how is that fared compared to the market for this week?
Well, those are all above what the market did for this week. As at the same time as I measured the portfolios, the S&P 500 was up 0.22 this week, which measured from last Friday's close. However, today is an up day so far, and we're at the highest level of the week so far. Markets spent almost all of this week at lower levels than where it closed last Friday. In fact, the earlier part of the week was characterized by quite significant negative moves intraday, Monday, Tuesday, then opened up somewhat Wednesday and proceeded to spend Wednesday and yesterday sort of going sideways. And this week, actually, the market has failed to make any new highs, in contrast to the last few weeks. So it had a slightly different and slightly less confident, sanguine feel to it.
That's right. And how are our allocations within the portfolios?
Portfolio is actually a little more allocated this week than last, with once again all the action being in stocks rather than options. Peak allocation at one point just about touched 65% briefly, but has averaged in the low 40s.
And just to emphasize, we're going fairly light, mostly in cash going into the next week. So that is good. How are the portfolios risk managed throughout the week?
Well, as I've said, it was a slightly different sort of market this week from the last couple of weeks. I'd also add to what I've already said that the VIX index of volatility behaved rather differently this week. At one point on Tuesday, it was up to almost 18. Now, this is not extreme by normal standards, but when you consider it spent almost all of the last month between 11.5 and 13, this was something of a change in tone. A market that maybe isn't quite so confident of bullish, and as a consequence, options were more expensive. But we just didn't find specific opportunities in there that we liked sufficiently from a risk-reward point of view. It's probably also worth mentioning that there's been not only been a bit more action at the aggregate with the S&P index moving around a bit more, there's also possibly been a little bit less dispersion at the stock levels than there was in earlier weeks, something we've talked about before. This combination means it's not quite so much biased towards being a stock picker's market this week, but there's also reasonable contribution you can make to a portfolio's return through the amount of market allocation you take overall and variations in that allocation. So maybe a bit more balanced in terms of where you can generate return.
Thank you. And what do we need to look forward to from here on over the next week or two, Adam, in your opinion?
Well, if recent days are any guide, maybe we need to keep more of an eye on the Trump and China tariffs and trade story. It can occasionally reassert itself. and come back in focus again. As I've said for a few weeks, there'll be a fair bit of focus on the economic data, not because economics is interesting for its own sake, but because of the implications that come from that, and help to illuminate the next few months of what may or may not be a slowdown and monetary easing story. We had important data out of the US today with the employment report, another strong one. Given the rate at which the US is able to continue creating jobs and generate decent growth in workers' earnings, a scenario where the US goes into actual recession anytime soon is now looking like a pretty unlikely one. Other economies may not be so far from crossing that line, but given the importance of the US, that's what markets are focusing on, really. Okay, on the other hand, it means we probably don't get so much more help from the Fed for a while, because this isn't so necessary, but I think markets are maybe attributing some of the good news we've had recently to the actions the Fed already took, either correctly or incorrectly attributing to that. But if you're also looking to, say, the US equity market for indication of what investors are thinking, well, even though this week's been slightly more volatile than some, it's difficult not to conclude that investors are still positive. At the same time, of course, MarketsFlow isn't particularly troubled about whether markets are flat, rising or falling, because the investment decision process doesn't actually depend on markets behaving in one particular way. Return can be generated anyway. But so while we watch the economics and the other stories, we're not slaves to that.
Thank you for that useful insight, Adam. So that brings us to the end of our podcast. Thanks for watching or listening to us on YouTube. Please remember to subscribe to our channel. Have a great weekend, and we look forward to our next Friday's podcast. Take care.